These three stocks are ready for you to buy today. These three stocks are primed and ready for you to achieve massive gains in the market within a few days to maybe a week or two, okay? So welcome back, fellow speculators, to the Speculator's Edge, where super performance begins and opportunities await. I'm your host, Berg. Let's go ahead and jump into these charts here and jump into the stocks. Let me show you what's going on. So time is money, okay? So let's go ahead and get a move on. Okay, so I'm going to go over these charts on a technical theme and then flip over to the fundamental theme. Plus, I'm going to give you the how to manage your risk and position size accordingly to managing your risk. These three stocks here are ready for a takeoff, and they're moving today pretty well. So the first stock that we're going over is ALTM, Altus Midstream Company. They are in the energy and integrated oil and gas. Okay, so what's going on here with the technical theme? We do have a prior trend of greater than 25% from low to high. That's what you want to see when you're buying into a stock. So the prior trend has to be in an uptrend, and that's when you know you're buying within the direction. Okay, as long as the price is moving in that direction as well, that's giving you confirmation that we are still in that uptrend. So the next thing that we're doing, what we look for is where is the price at within the cycle of the stock, or what stage is this cycle? What stage is the price in within this cycle? Okay, and there's four stages within the cycle. We got stage 1, 2, 3, and 4. Okay, where you want to be buying is in the stage 2 uptrend, and you can see that by the 150-day moving average being above the 200-day moving average. Okay, so that'll tell you. Plus, you also got to look to see if there is demand or buying power within here, and of course you can do that by looking if the demand, if the volume is above the 50-day moving average of volume. Okay, and so we do have quite a bit of buying within here, so we do have some support with that from institutions, or at least that's what that's telling me. The base, next thing that we do is we count the base and look for a pattern within that base. And practically, you know, you've got about 4 to 5 bases before the stock price starts to peter out, where you know, institutional investors are distributing their shares to retail investors like us, okay, or traders like us. And that's what happens with that. So the higher the base count, the less probability of the stock actually moving more, okay, and it increases the chances of larger price moves to the downside. So a lot more volatility within the stock, okay. And of course, this stock hardly has any volatility. It's been pretty nice here, just moving up. If you want, I call this the primary base, but you can go back and you can say, okay, well, this is the primary base because this is more of a base with this base being on top of that base. So this is a base on a base. Okay, so we can say that this is a secondary base with a cup with handle. Okay, so this is the cup right here forming the bowl, and then we have the handle. Okay, so the handle, within this handle, what we're looking for within the base and the pattern within those elements, we're going to look at the price action. So what's going on with price? So as you can tell, we do have low volatility all within this stock. I mean, there's nice tight price action, nice tight price ranges. Not only that, within the handle, it really gets nice and tight right here. It keeps within this range of this day right here, and that's what we want to see. And not only that, you can see nice tight price action right here as well. So there's a lot of low volatility within this stock. Okay, so not only that, next thing that we're looking for is what's going on with the price. Is it working off a certain moving average? Do we have buying off of that moving average? And of course we do. We have it down here on the 50-day moving average quite a bit. And then we have it off this 20-day moving average, where it just bounces off that 20-day moving average. Okay, so you do have demand right there within that. And so that's telling you that there are institutions buying the stock, you know, or, you know, some investors popping the stock up as it gets down to that 20-day moving average. So that's great to see. That's what we do want to see. Okay, not only that, let's see, we are at 52-week highs with this stock, so practically it moves past that massive resistance level, and this one has a chance to really move. Okay, so because there's not any supply. If you look to the left of the chart right over here, you don't really see any supply. You don't really see any supply right here because it already ate all that supply on this day. And as you can tell, we don't really have any supply back here, okay? And on a weekly chart, we go and look. If we go and look here, there is supply, back over here at around that $72 mark, just a little bit, not much, but this thing can climb. I mean, it can get a move on. It can climb high from here. Okay, so other than that, what you're looking for after that is you're looking for the volume. What's going on with volume? Volume decreases significantly within the base. That's what you want to see. You want to see a decrease within the pattern, within the handle, and within the base. Okay, you want to see a significant dry up. So a significant volume decrease, and that means it needs to be below that 50-day moving average, okay, of volume. And so we do have it decrease within the base and the handle, and as it's breaking out of this handle here, it is increasing. The volume is increasing, so that's great to see. We're trading 167,000 shares right now at $71. Okay, that's quite a bit right there. So I mean, do the math, you'll get it, So anyway, next thing that we're going to do is we're looking for the super pivot. Well, where is this super pivot? The super pivot is at $70, which was breached today and has been knocked on several times within the handle. So it did break out today and did breach that $70 super pivot. And so how you're going to manage your risk on this is you're going to place your stop 3 cents below the low of today at $68.97. This will give you about a 3.7% risk stop loss percentage, so it'll give you about a 3.7% risk. Okay, so let's go ahead and look at the risk or the position sizing calculator, and I'll show you how you do this. So let's say you start off with a $10,000 account. Percent willing to risk on the trade is only 1%, and so you're willing to risk or lose, let's put it this way, $100. That's how I look at it. So what are you willing to lose on this trade? And so I'd be willing to lose $100 out of a $10,000 account, okay? So your buy point at $71.65. Right now it's $71.17. So I can change that at $71.17, and that gives us about a 3% loss when you place your stop at $68.97. So that's really tight stop, but that's okay. That's good to see because the markets could get volatile, and hey, it's best to tighten up your stops if that's the case, if the market does decide that it wants to get a little crazy right here, okay? So other than that, your position size is going to be about 30%. I don't recommend going over that 30% mark. I try to stay within the 25% mark, okay? But this is a really tight stop right here, and that's the reason why this is calculating on a position size at $3,235 out of a $10,000 account equity, okay? So being 30%, that's quite a bit, but hey, you're protected pretty well right here with the 3% stop. So it'll be okay. So your percent profit target, you're looking at 3 times your stop loss or 3 times your risk. So your reward needs to be 3 times your risk, okay? That's how I see it. You can do it 2 times, but I'd say 3 times is better. It gives you more breathing room. So if you're trading poorly, you can pick it up if, when you're on those winners, you can pick up those losers pretty quick, and, keep consistent with it. So the percent profit target is going to be at 9.27% with the dollar profit target at $77.77, which that's not bad. So if you want to take profits right there, go ahead and start taking profits off, and, maybe the stock might cool off and, kind of pull back a little bit within the range there. So let's see here. So let's go look at that real quick, and I'll show you how this could work out. Okay, now it's back up to 72.07. Okay, so this stock, yeah, it's doing really well today. So other than that, so what this stock could do is it could take off running right here, and then kind of pull back, and then move forward again. And then what you do is you place your stop, right below that low of this little pullback. If this happens, all you got to do is just think about, what could happen with this stock. But the way this has been trading, I mean, I wouldn't be surprised. Maybe it just comes back and meanders, kind of just meanders around right here, like this right here, and it might do that right there. But I mean, if it does decide to move up, and pull back and then move back up. Place your stop below that low of that pullback and start increasing your position a little bit more right there. Okay, so that'll give you progressive exposure, which that's what you want to do. But if this stock does reach your stop loss, go ahead and jump out, because you don't want to be in that stock anymore. It's telling you it's dead in the water. Take your loss. Okay, just obey your stop loss and you'll be okay. So that's the name of the game. But if it does and it pulls back right here, let's say it gets to this low right here within this handle, it might just kind of meander around it and then just fall off. Okay, that's not what we want to. We don't want to be in that when it does that. Okay, so just listen to your stop, just obey your stop, get out when it says. Okay. So another thing that I like about this stock here too is that the relative strength line compared to the S&P 500 and its components here, it's a really strong stock. It's a high alpha name. Okay, and the RS line is making new highs, or making 52-week highs, as this stock is making 52-week highs with it. Okay, so that's good to see. That's good confirmation right there that this is a strong stock. Okay, so let's go ahead and move on to FTSI. This is another one in the energy and oil equipment and services this time. Okay, this is FTS International Inc. So we are in this prior trend of greater than 25% from low to high. This is a stage 2 uptrend. As you can tell, that we are reaching this stage 2 uptrend right here with 150-day over the 200-day moving average. Plus we have really good demand over that 50-day moving average of volume. Quite a bit of it right here. We are in what I call a base on top of a base, and this one you could say is a secondary base. And this secondary base, within this secondary base, the pattern that we have is a cup with handle. This cup right here forming this bowl shape with this handle pointing down. This is really good. I like how this handle is formed right here, because when you look at charts and you go through a lot of charts, usually you want to see that kind of that correctional period, or the just the selling, plus how the price action is working with that selling. So as that handle is forming and it's moving down, it doesn't move down really hard at all, actually. I mean, you don't have major selling within that. Okay, so what's going on is that sellers are, just letting this down really easy. They're letting the stock down really easy, nice and light, nothing, panicky. They're not scared to take too much profit right here. So as that's moving down, what you do is you draw your trend line within this handle from the high to the lower highs. Okay, and this will give you an idea as to where that handle is breaking out, or where it's going to break out at what price. And of course, yesterday we get that break of that price, or that downtrend within that handle yesterday. So it is what it is, but on decent volume. So other than that, I mean, that's how you do that with a cup and handle, and that's what you want to look for, is more of a downsloping handle. Okay, so not only that, now we're looking for price. What's going on with price? We do have low volatility. We do have these contractional periods, especially within this handle, and nice tight price action here, within here, and within here too, and as you can see right here as well. So there is a lot of price contractions within this stock. So practically price is coiling, getting ready for takeoff. Okay, and that's what we want to see with that. So other than that, price does work off the 50-day moving average. As you can tell, you have buying right here off this 50-day, buying right here off the 50-day, buying right here off the 50-day. Okay, and you have buying back over here off the 50-day as well. So that's good. That's telling you that there is institutions in on this stock, that they're trying to prop this stock up and push it up, because they're looking for a good profit right here. Okay, so not only that, we are near 52-week highs. Actually, we just passed 52-week highs. Okay, at 52-week highs was at $30. We did surpass it with the high at $30.09. So that's good to see. Now the pressure's off, and this stock could really take off and get a move on within within a day, a week, 2 weeks, whatever. But Anyway, so what else we're looking for is we're looking for a volume decreasing within the base and increasing while breaking out of the base. Okay, and so what we do have is, of course, we have this nice volume dry up right here as it forms this base, and then we also have it dry up right here within the handle. Okay, so it is drying up within the handle, and it is increasing while breaking out to the 52-week highs. So we do have demand while it is breaking out to the 52-week highs. This gives us even more conviction that this trade could be a high probability, very profitable trade for us. Okay, so our super pivot right here is breached at $29.50, and of course, like I said, it did break that, and this one, like I said, could get a move on right here. So how you're going to manage your risk accordingly to this here. So you're going to place your stop at 60 cents below the low of today at $28.20. This will give you about a 4.5% risk. Okay, so let's go look right now. So it's the price is at $29.85, and we're going to place our stop at 28.20. So it gives you about a 5.5% risk. Okay, so 1% over that. So you got about a 5.5% risk right here, and your position size, of course, is going to be about $1,809. So that'll be about 18% of your total account equity, and the number of shares that you'll buy is 60 because of that. So with your stop loss being placed at 5.5%, you're going to take your profit target, your percent profit target 3 times that, which will be about 16.5%. Okay, so your dollar in profit target terms is going to be at $34.80. So this stock's got to move up about $5, which ain't too bad. Okay, it's not too bad at all from here. But other than that, if your stock is hit, if your stop is hit at that 5% level, just get out as soon as it gets that $28.20. Just drop the stock and move on. We got a lot of opportunity every day coming up, so I mean, just get ready and be prepared for that. So if you want to go look here, let's see here. I'm going to show you when you're riding this here. What you're going to look for is hopefully this will push out even more, get up to that profit area, and kind of consolidate a little bit right here and do this, and then kind of come back and then maybe move up out of that. And then of course progressive exposure, so move your stop up. If it does pull back, if you still have high conviction that this stock is going to go even higher, then that's what you do right there. Go ahead and start buying as it's moving up. Okay, adding to your position. So, but if it does back down and pushes past this 25-29 level here, if it does that, then I'm going to tell you right now, if it does, then this trade is going to be dead in the water, and I wouldn't even consider going back and trying to trade it, because it could just do that and move down. Okay, or the next thing, what it could do is just move in this range right here, and that's still a dead in the water trade, and you don't really want to be looking at that. Okay, that's not what you want. Okay, so other than that, and that's how you would trade that and manage your risk and position size accordingly to your risk. Okay, so let's move on to the next one, LINC. This is Lincoln Educational Services. They are in the consumer discretionary sector in the business training agency industry. So what I like about this stock here, I'm going to have to pull this up on a weekly chart here. LINC. This chart here looks really good right here. This is a nice primary base, kind of a rounding bottom. But here's the thing that I want to point out. This is a part of BCP, Mark Minervini's BCP action or characteristic of a chart pattern. And yeah, this one is from high to low right here is about a 51% drop, which is pretty big. I mean, it is big because they can wipe out half your account. I mean, yeah, so it is big. But other than that, how you read a VCP, how you get to VCP, is you got to go from the high of the start of the base to the low of the start of the base, and then go to the next wave, which that one was 50%. The first wave was 51%. The next wave is at 34%, and then the third wave is 13%. So that's what happens. So VCP stands for volatility contraction pattern. So volatility or price action contracts within a price range, okay? And it keeps contracting. It can do this, you know, 3, 4, 5 times. And it can just go bloop, bloop, just like that, and just contract. And then you can see right here on this contractional period, right here, look at that. 7%. So we're getting cut in half on this one right here, okay, from this high to this low, and then from this high to this low. So that's really good to see. This is what you want to see. This is the basis of a VCP pattern. Okay, really good to see. But other than that, so what we got is we got this prior trend of greater than 25%. We are in a stage 2, as you can tell, because the 150-day moving average is above the 200-day moving average. Not only that, what's really good to see is the 200-day moving average moving up and all moving averages moving up, meaning that we do have momentum within this price. This price does have momentum. It's good to see. So next thing that we're looking for is a base and the pattern within the base. We are in a primary base, as you can tell on the weekly chart here. We have this nice consolidation right here. Nice, but it was whatever if you want to say, but we do have a stage 1 right here, breaks out, nice volume, huge volume, all within here. And this would be the primary base right here, okay, formed. So with this here, what we have is we have this rounding bottom. We have a rounding bottom with a handle right here happening. So this rounding bottom with the handle, and what's happening within this handle is we get low volatility. This nice contraction in price, nice tight price range, and it's working off the 50 and the 200-day moving averages, okay? This is really good to see. This is what you want to see. We have institutions buying this stock, as you can tell right here, huge demand within that. Not only that, we're near 52-week highs at $8.99, okay? So we're only about 98 cents away from that. Okay, so then what you see here is we see that this volume decreases within this within the base and the handle, and then it increases while breaking out of the handle, okay? So this is what we want to see, is this is increasing. We got more of a probability, or a higher probability, that this can get up to those 52-week highs at $8.99. So with this here, the super pivot's going to be breached at $7.80, which is right here, of course, and this will be at around this close right here on this day, on this massive volume. Okay, that will be a super pivot. And this one can really take off, and from here, just because the way this is acting and the price action and the volume, and just, I mean, it can get a move on from here. So how you're going to manage your risk when you do this here, you're going to place your stop 3 cents below the low of yesterday at $7.60, which is going to give you about a 5% risk. And so let's go look how that's going, how you're going to position size yourself accordingly to that. So let's say you buy in, you're buying in at $8.01 here, and you place your stop at $7.60. So at $7.60, you got position size is going to be 1,953, so about 19% of your total account equity. Excuse me, and the number of shares you're going to buy is 243 shares, okay? So your stop loss percent will give you about a 5.10%, so about a 5% stop. Profit target, you're looking 3 times for your stop loss at 15%. And the profit target in dollar terms is going to be $9.20 or 25 cents, somewhere around there, okay? And that's where, you know, you want to be taking some profit, a little bit of profit. Wait for a little pullback, and then add to that pullback when it's starting to move out of that pullback. And that's how you would trade that, trade LINC on that, okay? But other than that, this stock looks really well, looks really good, like right here. And I mean, I like it. Am I trading it? No, but it is what it is. So I'll pass it up on the opportunity on that for now and move on. So anyway, so let's go over the fundamentals real quick, and then I'm going to leave you with that. And this is just going to be a quick recap with the fundamentals. With ALTM, this is the composite rating at 94 on the IBD list here. It is ranked number 2 out of its industry here. This industry group rank is at 18, excellent out of 197. Group relative strength rating is an A, excellent again. Earnings per share due date is on the July 28th, so coming up next month. Earnings per share percent change last quarter is 231%, with the earnings per share percent estimated percent change current quarter 1,329%. That's a huge increase. Okay, we'll see about that. And then the number of quarters of earnings per share acceleration has been 1, so that's pretty good to see. Your SMR rating is, we don't have an SMR rating, but your 3-year sales growth rate is 98% with an annual pre-tax margin of 54.9%. So they are keeping profit and they are making money. So on a 3-year sales growth rate, 98% increase, yeah. So their product is selling, they're doing well. Of course, oil and gas, moving the way it's been. It's been good. So yeah, this has been a really good sector and industry because of oil and gas moving, moving higher in the futures market. So what we do have is we do have an accumulation distribution rating of an A minus. So that's good to see. So we do have accumulation, meaning that there are institutions in there buying, but you can see right here, percent change in funds owning the stock has been negative 3%. Which that's not terrible, but we'd rather see an increase in the funds owning the stock, but oh well, and quarters of increase in fund ownership, but oh well. So anyway, so let's move on to FTSI real quick and get a checkup on that. And the composite rating here is a 78, and we are ranked number 3. This is ranked number 3 within its competitors here. This industry group rank is 15 with the group relative strength rating at A+, so this is really good to see right here. Strong industry and strong relative strength for the group. The earnings per share percent change last quarter was 71% with 3 quarters of earnings per share acceleration. Great to see. Not only that, other than that, I mean the sales, you don't really have any sales coming in on this stock. But we do have a little bit of accumulation at a B minus here, and 1% change in funds owning the stock with 2 quarters of increasing fund ownership. So we do have institutions in here buying this stock, but I mean it's not all that much, and their sales really does. I mean it does suck, but it is what it is. Their earnings per share was great. Take it or leave it, however you want to look at that, whatever you want to do with that. So not only that, these videos are for educational purposes only, so do your due diligence before venturing off into stocks, okay? You're at fault for your own actions, okay? So take responsibility for your own actions. And then the last one here, LINC, let's go look to see. This one has a composite rating of 77. It's not even ranked within its industry, but it is what it is. This industry group rank is one of the lowest at 195. Not great to see, but I'm more of a technical guy and I like to trade the technicals. And yeah, but if you want to follow the fundamentals, follow the fundamentals. I'm going to tell you right now, this is a weak industry group, and I don't care for that. With a group relative strength rating at E, yeah, I don't care for that one at all. So what we have is we have a 263% earnings per share percent change from last quarter. Not only that, last 3 quarters average earnings per share growth has been 105% with 1 quarter of earnings per share acceleration. So this stock fundamentally is really, really good. It's excellent. Matter of fact, consecutive years of annual earnings per share growth has been 4 with 61% earnings per share. Estimated percent change for the current year is 61%. Really good right here. The sales not so great, but the SMR rating is pretty good at a B. So the sales margin return on equity, I mean, it's pretty high up there within the ranking of the SMR. Okay. Other than that, we do have an accumulation distribution rating of A+. Excellent, good to go. Percent change in funds owning the stock has been 2% with 3 quarters of increasing fund ownership. So I'd say that there are institutions within this stock that are buying, and that's what you want to swim with, who you want to swim with. And so anyway, I'm going to go ahead and leave it off right here. This is nearly 30 minutes on this video. I need to start making them a little bit shorter and just going over the charts real quick and giving a kind of a brief message on them. But other than that, thank you for subscribing. Thank you for watching. If you haven't already subscribed, please do. You can click on the TSC logo in the bottom right hand corner of this video, or just subscribe to the box, whatever. But other than that, leave a comment. If you have any questions, I'll be more than happy to help you. And I hope you found the information informative and educational as well. So other than that, like the video as well, leave a review, please. So other than that, I've also posted stock market mentor down below in my description. So go check out Dan Fitzpatrick. I've been doing some work for him, creating some scans for him, trying to help him out. Really great guy. Yeah, really great guy. So other than that, I've been around for a long time in this industry. He's a mental giant, and I recommend that you go check his website out and subscribe. A lot of information there with him. But other than that, he gave me the opportunity to help him, and that's what I've been doing. So I have a lot on my plate right now, but it's okay. I'm still going to give you these videos, and you're going to be good. So other than that, thank you again for watching here at TSC. We trade in the present and we follow and we oh man, I'm moving way too fast here. We study the past for knowledge, and we follow the process of trading to build our future here at TSC. Okay, sorry about that. And that was all a tongue twister. But it is what it is. So I hope you enjoyed that and got a laugh out of that one. Okay, so other than that, opportunities awaits, my friends.